Hello everyone, this is CA Deepika Ganesan, Chartered Accountant, Certified GST Trainer by Mason. So last week we saw a video on GST 2.0 reforms for footwear industry. So today we are going to see a video on GST 2.0 reforms for hospitality industry. So let us see what the GST rate change has impacted for the common man and the hotel industry. Now, before getting into the rate change, so let us quickly understand the history of the GST rates for this accommodation. So basically, if you see, we had exemptions earlier from 1st July 2017, and the exemptions were till 17 July 2022. So this, if you see in this particular slide, you can see the exemptions, how it was. So from 18 July 2022 onwards, there are no exemptions. So that means today also we don't have any exemptions with regard to accommodation. So basically before, if it was like 1,000 or less than 1,000, then there was an exemption. Now there is no exemption. So directly moving on to the rates. So the history of GST rates. So from 1st July 2017 to 30th September 2019, the slabs, like we had 12, 18, and 28%. So when the declared tariff was from 1,000 to 2,499, 12%, 2,500 to 7,499, 18%, and 7,500 and above, it was 28%. So this was until 30th September 2019. Now, in between, from 27 July, there was one change, 27 July 2018 onwards. What was the change was this declared tariff was replaced with value of supply. So what is the difference between the two? Declared tariff is the tariff declared. Like for example, the hotel, if you take any hotel, they will have a tariff. Say a room is 2,000, 3,000, what that will be the declared tariff. But they may offer you some discount on some seasons, occasion. Say a room was say 5,000. Now, say the discount is 60%. So 60% means 3,000 off, only 40%, 2,000 only you're paying. So in this case, if it was before 27th July 2018, then the rate which should have been applied was 18% because the declared tariff is 5,000. The value of supply is 2,000, but still the rate will be based on the declared tariff only. But after 27 July 2018 onwards, it is based on value of supply. So the value of supply here is 2,000. That is after discount is what? Value of supply. Then in that case, the rate will be only 12%. So this is a benefit for the common man. From October 2019, 1st October 2019 till 21st September 2025, the rates like value of supply per unit per day, if it is above 1,000 and less than or equal to 7,500, then 12%. If it is above 7,500, 18%. Now comes the GST 2.0 rate change from 22nd September 2025 onwards. That is the Diwali gift announced by our central government. When the value of supply is not exceeding 7,500, the rate has reduced from 12% to 5%. So this is a positive change, but it comes with a condition no input tax credit. So earlier it was 12%, but we had input tax credit. Now there is no input tax credit. So because of this, what impact it will create, we'll see in the next slide. Suppose the value of supply is exceeding 7,500, there is no change. The same rate, 18% prevails. So what is the change when the value of supply per unit per day is not exceeding 7,500? The old rate was 12% with ITC. The new rate is 5% without ITC. If it is exceeding 7,500, no change, same 18% for both the cases. Now, what are the pros and cons and the impact? Suppose a hotel or a guest house, any hospitality industry, which is they are having rooms where the value of supply per unit per day is not exceeding 7,500. They have only those rooms. They don't have any rooms where the value of supply is exceeding 7,500. In this case, what will happen is the rate is 5%. That is the advantage. But what is the disadvantage? Is no input tax credit. So in that case, what will happen is when the hotel is not able to avail the input tax credit, they will add it to the cost. So they will not bear the loss. So in this case, what they will do, they cannot book this input tax credit as an asset in the books of accounts. They will book it as they will have to expense it off. So they are not able to avail the ITC. They'll have a lot of input services. So in this case, what they will do is they will add it to your cost, and this will reflect in your tariff. So the tariff will increase. So then definitely your value of supply will increase. So after that, you will pay 5% GST. So in this case, you cannot expect a huge reduction of the final price. Though the rate has reduced, but still you cannot expect a huge reduction. Maybe few rupees, it can be less, but definitely not a huge reduction. And or it may be the same price as what you paid earlier. Now, second case is where the hotels are having rooms where the value of supply per day per unit per day is exceeding 7,500, not exceeding 7,000. So both the rooms they have. So in this case, what will happen? There is no explicit condition that in case the hotel is having both kind of rooms, then they cannot book that input tax credit as asset. No, there is no explicit condition, because for the rooms where the value of supply is exceeding 75, they are eligible to take ITC. So the entire ITC which they have, they can book it as an asset in the books of accounts, and they can avail it in the returns GSTR 3B. So that will get credited to the electronic credit ledger, and while utilizing, they can utilize only towards the rooms which has a value of supply not exceeding, sorry, exceeding 7,500. For not exceeding 7,500, there is no ITC. So in this case, if the hotel is able to exhaust entire ITC, that is, if they are able to utilize the entire ITC, then you can expect a reduction in price with regard to the rooms where the value of supply is less than 7,500 or not exceeding 7,500. Say suppose the room rent is say 3,000. So 5%. So it comes to 150, 3,150. You will pay only 3,150, because the whatever input tax credit you have, that was utilized for the rooms which were exceeding 7,500. So in this case, the hotel will not increase it because they can book it as an asset. Suppose the hotel is not able to utilize the entire ITC, then yes, the cost may increase for this also. So this is the case where the hotel industry also have to take a note and work out on this calculations. So basically, a straight example we are going to see. In this case, I have not applied this input tax credit condition, direct only the rate application. So 5,000, if the value of supply was 5,000, old rate is 12%, so 600 was the GST, new is 250. So impact reduction of rupees 350 and 7,000 means earlier old rate was 12%, 840 was the GST, now 5%, 350. The impact is 490 rupees reduction. Again, the no ITC condition is not taken into consideration here. So just direct application of the GST rates. And if it was 8,000, same, there is no rate change. So 1,440. If it was 10,000, same, 1,800, 1,800. So coming to the conclusion. So if you ask me whether this rate change is a welcome move or not, I would say the rate reduction is a welcome move, like the from 12% to 5% is a welcome move. But the condition of no ITC is what is going to impact the customers and also the hotel industry of a lot of calculations and complaints. So this is where the common ban is also not benefiting at large. Maybe there may be a reduction, but cannot be a huge reduction since the condition of no ITC is present. If there was no condition, then yes, we would have got a good benefit. So maybe we can wait and watch if the government brings any changes or amendments with regard to this rate, and if this condition of no ITC is omitted, then it will be a good move. So let us wait and watch. So until then, stay tuned with this channel GST Simplified by CA Deepika Ganesan for more informative videos on GST. And do comment your feedbacks and also suggestions, and also comment like you want the impact of GST 2.0 on which industry for the next session. So, and thank you so much everyone for watching the video and giving me feedbacks and suggestions. So continue watching for informative videos on GST. So until then, stay tuned. This is CA Deepika Ganesan signing off. Thank you and good day. Wish you all the best.